Hey everybody out there, welcome to today's live episode of That Crypto Show, and we are live here for the US interest rate decision, probably the most important economic event this year. I know I said that already of the last event, which was the inflation data that we had 2 weeks ago, but as a matter of fact, since this one was a little bit diverse, not really showing the direction, I think today the interest rate direction is going to point us into the direction of what the market is going to see in behaving for the rest of the year. This is going to be a two-type webinar, actually. And let me share my screen here with you real quickly. Hold on a second. Here we go. So this is going to be a two-type webinar, really. We are first going to witness in about 12 minutes at 8 p.m. CET or 6 p.m. UTC, the actual interest rate decision. And then we have some time to kind of witness what the markets are going to do, how the volatility is going to behave. Then at 8:30 or 6:30 UTC, we are going to have the press conference done by the Federal Reserve Bank in the US of A, which probably is going to be even the more important event, because that usually, gets you to kind of read in between the lines of how the strategy of a central bank is going to be in terms of how they want to progress with either rate hikes, how long the rates are going to stay this high, or if they in the future are maybe going to lower the rates again. So we have still some time to prepare here. You can see I loaded up 4 charts on my screen. As always, guys, please, feel free to fire away your questions, your comments, everything in the chat here. I'm very sure after the interest rate decision itself, in about 11 minutes, we are going to have plenty of time to answer those in between until Jerome Powell is going to step in front of the camera then. And until then, I want to use the time here to prepare you a little bit about what I'm watching here, how I've positioned myself, where I also see chances where you potentially could position yourself. So I'm watching 4 charts really by the end of the day today. And I've broken this down here to 50-minute charts. Maybe we are going to fine-tune this to a lower time frame later. First of all, euro dollar here, which is the top left chart. Have I put this large here? Yeah, I have. Then you have dollar versus the Japanese yen. Also very important in my opinion. Bottom left here, we have the S&P 500, so the most important, largest US stock exchange there is. And then, of course, we want to also watch a little bit of cryptocurrencies. So we have Bitcoin here, bottom right. And quick run through of what we are expecting here. So in terms of interest rate decision today, if we would have had this webinar, this live stream maybe 2.5 weeks ago, I still would have said we are expecting a rate hike of 0.5% to 3% of interest rate. Since the inflation data came out worse than expected, the expectation of the market is a rate hike of 0.75%, which is quite a lot, to 3.25%. Now, if you've been following me on our Telegram channel already, and if you haven't done so, you should. And let me quickly look if I have put up the link actually for you here on YouTube. Hold on a second. So that is this one. I have not, as I see here, but I will after the interest rate decision here. I will put a link for you in the description, because then you would have seen that one of my favorite trades these days has been to short euro dollar. Shorting euro dollar meaning that I buy dollar, short the euro, sell the euro, and I've done so over the couple of the last weeks, really, or months to be more precise, at 1.0. Last time was here September 14th, I think. where I shorted 500,000 euro at roughly 1.0. As you can see, this position has run massively into profit. I did so because in anticipation that the rate hike is going to be somewhere at around 0.75%. So it's more attractive again to invest in the US dollar than it is in the euro. Nice position here. As I said, if you are not on Telegram yet, wait for the link here. I'm going to share that one with you later after the interest rate decision, so you can join there as well. You can also rewatch other videos. Go to our description of our YouTube channel where you'll find the link as well. And and why did I do that? Maybe let's run quickly over that. Simply due to the fact that we have a twofold scenario, in my opinion. We have, first of all, a risk-off scenario. Risk-off meaning that the majority of investors are looking for assets that are so-called safe havens. Safe havens are usually assets in US dollar, especially treasury bonds from the US of A. So state debt issued by the USA, if you want to translate that. And of course, if you want to buy this, you need to buy the US dollar, meaning if you are living in the Eurozone, you need to sell your euro, buy the US dollar to buy the treasuries. And it's becoming, so first of all, we have this risk-off scenario. And then second of all, since, especially this year in March, the Federal Reserve Bank has been hiking the rates faster than the Eurozone did. So you had the spread of more interest in the USA than you had in the Eurozone. This slowed down a little bit in last month when the Eurozone also hiked by 0.75%. However, my expectation here really was now today we are going to see a rate hike of probably what the forecast is to 3.25%. Then we have 3.25% in the USA, and we have only 1.25% in the Eurozone in a risk environment. So it should become more attractive to buy the US dollar. Now, however, what we've seen today in terms of development is, especially today, that is, and if I zoom out here a little bit on this 50-minute chart, is that we really saw the prices coming down massively. So we saw a lot of US dollar buying in comparison to the euro, or US dollar buying, euro selling, that is. And so it seems like a lot of players out there today also decided, especially this morning. So you can see here this massive candle going down. Let's zoom in here a little bit. Candles going down here on the 50 minutes time frame that kind of had the same idea like I had. However, I executed this idea already earlier. I do not like to directly trade the news. I always like to prepare my positions in front of the news. So the question now, of course, it's going to be, how are the markets going to react? And there are really three scenarios, and I'm going to run through those very fast because we only have 5 minutes left here until the decision. And if we see a rate hike lower than the expectation, so we end up at 3% instead of 3.25%, for example, then we are probably going to see massive risk on movements with a lot of people being caught here at the wrong side, which would mean we are going to see euro dollar going through the roof. I've prepared try to prepare for this because my position here is nicely in profit already by placing, you cannot see this, I'm sorry, let me quickly put it like this. Can you see it like this? No, like this also not. Like this. I'm sorry, my windows were kind of in the way. If you look there to the into my euro dollar position, you can see I have my stop loss here at 0.9950, so 50 pips in profit. I'm of course hoping that this is not going to be stopped out by volatility, but that of course is a possibility. Those events are always kind of unpredictable. But if we see like a lower than expected rate hike, we will definitely see euro dollar going up massively as a first reaction. That is, we are probably going to see the S&P 500 going up massively. We are going to see dollar yen going down, because then you have to pay less dollars in comparison to the yen. So the two currencies that I would like to play with are either euro dollar or dollar yen. I'm going to explain to you why in a minute. As well as the S&P 500 going up, then we are probably going to see Bitcoin going up. We are seeing some upwards movement here as well, which probably is profit taking of people that were short today, that are closing their position right now because they want to be flat during this event. If we are going to see the forecast being met, 3.25%, which in 95% we are going to see today. I'm not expecting anything above or below that, honestly speaking. We are probably also going to first see the reaction into the direction, meaning euro dollar going lower, which I'm speculating on, US dollar yen going higher, the S&P 500 coming down, Bitcoin coming down. However, we quickly could see some profit taking, especially in currencies then as well. So if you're not yet positioned, my favorite direction still is short euro US dollar, long US dollar yen, short S&P 500, short Bitcoin until the direction. If we see the number coming in at 3.5%, well, that would mean probably a crash in risk on assets like the S&P 500, like Bitcoin, and a massive down candle probably in euro US dollar, massive up candle in US dollar yen. Quickly before we start, we have a promo code today, a brand new one just for this. If you want to trade this as well, you can enter the promo code. And I quickly have to look it up again because I just had to restart my computer newly here, which is, here we go, which is called this FED September, so FED SEP 22. And if you activate that one, you can see I just did so, and then you deposit a little bit of money further to your account. So I'm just going to deposit 5,000 US dollars more here. Chup, going to maybe reload this one now. Then you can see it's activated. You get a fee discount of 50%, which is pretty awesome, especially if you are planning to also trade this event today. So FED SEP 22, 50% discount off, valid for a week. I highly recommend that you activate it today if you want to participate in hopefully some nice live trading that we are going to see today. All right, so numbers should be coming out now. Let me reload this page. Are we seeing some reaction here already? We are seeing Bitcoin going to the upside, S&P 500 going to the upside, US dollar massively down. I'm still not getting any update here from daily FX. You can see here US dollar going further down. This is very good for us. If we look here at our trade in euro US dollar, 7,500 now in front. Now Bitcoin going down here. See this candle. So first reaction, 3.25%. You can see it just came in here. So like expected, a rate hike of 0.75%. That means now we have a larger spread in interest rates compared from the USA compared to the Eurozone again. Actually, the spread is now we have 3.25% to 1.25%, so plus 2% in the USA. So reaction definitely now to the downside here. You can see the reaction here. You can see very nicely our trade here in euro US dollar. I'm going to switch down here now to the 5-minute time frame actually. It's a little bit difficult, it's loading. Let me take away those lines here to the downside. I want to adjust here because sooner or later this is going to come back. I want to secure my profits here, obviously. So I'm going to adjust the stop loss to 0.99 now, which means I have secured 100 pips of profit there already. Sooner or later, we can now do maybe a layover here also with an average true range. Average true range. No, it's not the one I was looking for. ATR. Anyway, cannot find it right now. Let's see here further how things are developing. If you remember here my long-term chart, so maybe that was really the catalyst we've been waiting for here, is right now where I said we could see a soft landing, so to say, of the S&P 500 early December, the mid of December, somewhere between 3,450 and 3,600. So we're actually a little bit early on the way. I expected that we meet this upper range here a little bit later again. But again, this is just the first reaction. So I'm actually tempted to take my profit here right now. You can see, and maybe we go here down to the 1 minute time frame actually. Yeah, there's some profit. Maybe I'm going to regret this later, but oh well, we are $8,400 in front. So I'm going to close this now. Nice. So nice here. We made $8,200. Sorry, $8,200 on this trade. And I'm now want to wait to look a little bit for new entries here. So should we see here actually euro US dollar, and it's coming up now again. So it was pretty wise to close there. Should we see that one pulling back to where it started from here? So in the region here of 0.9872, I'm very tempted to short this one again. You can see also here the massive downswing we are seeing in the S&P 500. So that's another trade that was wise to do here, really. Sorry, I didn't mention that before. And contrary to this, the US dollar yen going up, because the difference is here you have euro US dollar. US dollar is the second currency, US dollar yen the first currency. So the charts are kind of inverted, but they kind of react the same, of course. So let's go here back to 5 minutes. Yeah, so what we see here is typical. So we were within what the market was expecting here, really. So, and that's very normal. And I want to illustrate this a little bit here in euro dollar. Maybe make the chart a little bit bigger so you guys can actually see this better. How do I do this? Here we go. And a little bit to the right. This is very typical. So this is exactly what the market expected, a rate hike of 0.75%. And it's very typical that you see a massive move first into the direction of what you would expect, and then you see some profit taking. So everybody, including myself, as you just saw, that one short before that is now tempted to take his profits. So I took $8,200 in profit just now, and then this of course drove the market up a little bit. Not my position by itself, of course, but a lot of traders out there that, of course, made the same trade probably in the same direction. So you're going to get kind of this V shape here, really. And typical really was now what I'm looking for is I'm looking for a pullback maybe all the way up here, because the narrative is still intact, right? What I just told you, we have still a much higher US interest rate than we have in the Eurozone. We still have this risk-off scenario. So people would still prefer to buy the US dollar, to buy secure assets denominated in US dollar than they would buy in euro. And it's the same, by the way, with the yen. That's why I also had this here on the charts. Probably is maybe even a little bit higher with the yen, because the interest rates in Japan are even lower than in the Eurozone. We have interest rates of 0.1% in Japan. So it's even more attractive. You're an institutional investor, you're a pension fund, you're you are bound, you have to buy so-called secure assets, which especially are treasuries, which are given out, bonds that are given out by countries. Then you probably would not buy Japanese bonds at the moment. You probably would prefer to focus on US bonds because you get more interest rate for that by the end of the day. Good. So we are going to let it take place a little bit. Maybe it's even coming down farther now. So it could have been a mistake, a too early close that I did here. Really, the narrative is still intact. So if you want to, use that promo code I just introduced to you, feel free to do so. I think there are going to be plenty of trading chances. We're going to wait now until 8:30 until Jerome Powell is going to talk, and then I want to comment live on that. Let's see if we have any comments so far already. Extreme volatility. Let's see here. Yeah, question from Claribots Saumo. I hope I pronounced that right. I remember you said that BTC could go down to 13. It's all in the realm of possibilities. Of course, nobody ever knows where's really the bottom of a bear market. And one thing I'm still missing is like this final sell off. I don't know if that one maybe happened already until 17,500 down there, or if this is still going to be in front of us. My expectation at the moment is that we are probably going to see a continuation of this sideways, light downways range in Bitcoin until early November, maybe even until early December. If this becomes true, you guys might remember that I derived this chart from the so-called US election pattern. So let me bring this up quickly here. Yeah, this one here, where I said, so the stock markets are, US stock markets, that is, are behaving very similar the first 2 years now after the election of Biden when they did with Trump. And that means we still should have this swing low to somewhere this area, which I marked here between, let's say, 3,400 and 3,600, which then would probably translate to Bitcoin being somewhere, at 15 or 13,000. However, I think it's important here to always differentiate between what is the long-term strategy for something and what is short-term. What we are doing right here, right now, of course, is extremely short-term. So this position in euro dollar that I opened on September 14th, it's a swing trade. It was open in anticipation that exactly what we are witnessing right now, what happened. And it was a good trade. I mean, it made me now $8,200. Nothing to complain about this. If you have like 1 or 2 trades like this a month, well, you're fine off. However, the long-term strategy, and I've been telling this also a lot, is that I'm slowly shifting from cash position, from risk off position into risk on position. So I'm slowly transitioning from what I have in cash, what I have in US dollar TIFA, for example. So part of that would be, if I go here to the main account, like part of those 265,000 that are still lying around there collecting dust at the moment, which I'm slowly transitioning back into risk-on assets, which are especially stocks, so the S&P 500 or blue chip stocks, if you want to say so, and of course also because I'm a Bitcoin maximalist into Bitcoin. And there I don't care really about. I bought some of those already at 30,000. I bought at 25,000. I bought at 20. I bought at 18,000. I was lucky and bought at 17,700 some too. I have my orders lined up there because I don't know where the bottom is going to be. So that's why I'm slowly dollar cost averaging my way back into the market long term, because long term it's probably with the next bull run not really going to matter if I bought at 25, 20, 15 or maybe 10. Of course, I could be wrong about this, or also that when we go down to 8. However, long term, do not try to catch the bottom. Really, if you believe in Bitcoin, if you believe in crypto as an asset class long term, times like this are a great chance to slowly shift into that asset class again. And you don't need to go all in at once. You can do that slowly, buy a little bit every week, every month. You still have time. I think earliest, as I said, November, December, we are maybe going to slowly see the turnaround on the market again. All right. What else do we have here? US dollar choice is the best. US dollar token is the best choice at the moment. Absolutely. If you've been holding on to stable coins, was very wise in the last months. However, do not miss out to catch the turnaround there. Really, it's always it's hard to go into the markets when everybody's pessimistic, but the money is earned in a bear market. What you invest long term in a bear market is going to determine if you are one of those people during the next bull market that are going to become rich. And you need to have a longer time horizon for this than just a couple of days. All right. Footsteps of a mega bull. It might be. It might be. I mean, the last bull run, in my opinion, was a little bit underwhelming, right? Kind of everybody, including me, expected 100,000 Bitcoin there, and multiples of it, maybe in Ethereum and other altcoins out there. But it didn't happen. But maybe, one of my ex-bosses always used to say, trading stocks is like, or trading financial markets like playing ping pong. For every ping, there's a pong. And sometimes when you have a very little ping, you get a very large pong. So maybe the reaction is going to be massively to the upside in the next bull cycle. Who knows? Yeah, that's a good question, and I'm happy that you took. I don't know how to pronounce your name correctly. That you asked this one. Hello, do you suggest we buy or sell? I don't know that much jargon. First of all, I'm happy that you just didn't press any buttons now because you wanted to earn some money. It's important to understand the jargon first. What is short? What is long? What is euro, US dollar? What is risk on? What is risk off? And you kind of get the feeling for that. You are going to learn this slowly over the course of the time if you, first of all, watch videos that we produce here for the Prime XPT Trading Academy. If you read on top of that a little bit, or also, and if you then start feeling a little bit more secure, what you also could do is you could go here to contests and participate in one of our trading contests here. So there are almost every week's new contests that are open to enter, being added here. We have a Telegram trading contest for the Academy here also at the moment, where you can practice what you've learned with demo money without risking real money. And if you then feel a little bit more secure, then you can start risking your real money. But important here, do not risk what you cannot afford to lose, because usually when we're in the beginning, you are going to lose a little bit. It's like, when you learn a new skill, it's normal. You always have to invest a little bit first until you can reach a level where you can live off that skill, hopefully. Alrighty, yeah. In case you didn't see it, we had a rate hike of 0.75% here to 3.25%. So, as expected, what we are doing now is we are going to wait until 8:30 when Jerome Powell is going to take the microphone and talk about what the Fed is going to do in terms of strategy. We are going to see continuous volatility there in the markets. For the moment, I think it's good to be flat. The question is now going to be, in my opinion, is he going to repeat what he said earlier, that the Fed is willing to stay aggressive, that the Fed is willing to keep the interest rates at a higher level than the market for a longer time than the market was expecting. This was the big thing that the market didn't like about the inflation data last time, because it supported what Jerome Powell was saying before that interest rate might be staying at a higher level than the market is expecting for a longer time. And this is not good for the stock markets. This also would not be very great for cryptocurrencies, because if you're an investor and you have like billions of US dollars and you have a choice, do I put it in the stock markets or cryptocurrencies for a risky, 20% a year, or do I play it safe and put it into US Treasury bonds for 4% a year, guaranteed? Most of the money is probably going to flow then into the safe haven assets. So really, as important as what we've seen now in the decision itself is going to be the speech. I'm going to take a little break right now, and I'm going to be back in about 5 minutes. So, and then we are going to watch together the press conference. I'm going to comment on that. I'm going to, on the fly, try to translate some stuff that is said there by Jerome Powell for you. And then we'll see if after what Mr. Powell is going to say there, we still think it's wise to, speculate into the same direction. And I'm going to put up the link for you now. So see you in about 5 minutes. All right, here we are again. As you can see, I've now already brought up here the website of the Federal Reserve, where the press conference is going to be broadcasted live. And it's like some very disturbing music here in the background at the moment. Let me quickly turn this down. Here we go. So another 7 minutes until we see that. Let us summarize here really quickly again on what happened here. So we saw this rate hike of the Federal Reserve, like expected, to by 0.75% to 3.25%, which means now, in my opinion, it's like pouring oil into the fire. We've really seen that this puts oil in the fire in terms of risk-off assets, meaning like by the reaction of the stock market of the S&P 500 here, top right, we saw has gone massively down because it's gotten more attractive to invest in asset classes that guarantee you a certain interest rate per year than it is to invest in asset classes that are more risky. And the same reaction, as so often nowadays, we've also seen here in Bitcoin. So if you compare here the top right chart with the bottom right chart, top right chart being the S&P 500, largest US stock index, the bottom right chart, Bitcoin, exactly the same reaction here. So I hope I just saw here this question from Heikel Jabri: is the interest rate good for crypto? And it's actually a good question, in my opinion. First reaction is not good for crypto because, as I said, cryptocurrencies by institutional investors, and institutional investors are the ones that are sitting on the money. They are the ones driving the prices out there in every asset classes. So retail traders like you, like me, and I trade higher volume, but still, I'm like nothing compared to something like a hedge fund out there that has like billions of dollars under their belt, which they use to position themselves, even with leverage. So short term, not good for cryptocurrencies. However, long term, I think there will come the time when people will start to understand that something like Bitcoin is actually designed in a deflationary way and as an escape from the US dollar, from fiat currencies. Well, and then, we are probably going to laugh about prices at 19,000 US dollars for Bitcoin in the future. This at least is what I think. Could of course come totally different. And like Barham just said here, rate hikes are not good for crypto. And this is also the sole reason why I've positioned myself short in euro dollar again, because I thought, it's the demand for US dollar is going to become higher. And as you can see here now, it actually seems, at the moment at least, also like it was at least a little bit wise to go out of the market. As I said earlier, should we see the market pull back really here to this area here, so somewhere between 0.987, 0.988, 0.99, I'm willing to sell euro dollar again. So I would go here again to my trading account with Prime XBT, use the bit of money I've put in there, and go here to Forex, select euro US dollar here, and click on the sell button. And as you saw, this worked very, very well for me. However, you sometimes need a longer breath. So do not throw all of your money in there at the same time. Yeah, we offer, Prime XBT offers a leverage of up to 1 to 1,000. But just because that leverage is offered doesn't automatically mean that you always need to take that leverage. You want to scale yourself slowly into the market there, really. Good. So 3 more minutes. I hope Mr. Powell is going to be on time. Not yet anything moving there. I'm sure we're going to see some more movements. I'm really, really nosy if he's going to empathize there again that the Fed is willing to do whatever to stop inflation, meaning that they are willing to keep interest rates at a higher level for a longer time. And one more chart really I want to show you then. I've shown this chart, I know, also quite a lot, but it's always, in my opinion, important, to have the long-term perspective. We all tend to clock ourselves up in those 4-hour charts or 5-minute charts and kind of not see the longer-term picture. In the past, what had happened when inflation peaked in the USA was that we found the stock market bottom. You can see this 1970, 1974, 1980, 1990, 2008, and I think we are going to see this now again here when inflation peaked in June 2022. Does not automatically mean that it's always exactly the bottom of the stock market. Like we saw here in 2008, it went quite further down. However, in the past, it correlated very, very good with the bottom. And, this is my long-term narrative. That's why I say, latest probably in December 2022, I'm probably going to invest almost 100% again in Bitcoin, Ethereum, and the stock market. Like I said, guys, the money is made in the bear market, and the money is made when all those influencers out there are crying and are whining about that prices are going further down. And we just saw here, and just we are not that many people watching here today, like 19, 20, and right now we had already 2 people saying like, oh, we're going to 13,000. It's easy to say something. I don't want to discredit you for it. Please don't get me wrong there. You could be right with that, by all means. But it's easy to have the same opinion like everybody in the market has, right? It's more difficult to see the chances to the upside again. And it was exactly the same 4 years ago, 2018, exactly the same situation. All the influencers said, or most of the influencers said, we are going down. Bitcoin is going to zero. Buy it at 1,000, buy it 500, buy it at 100, buy it $10. Well, and we all know the last chance of buying, and this was just because of COVID for good prices, was around $3,000 in 2020. And if you would have bought them, even in this bear market at 19,000 now, you still would be up by over 600%. Paul's already speaking, Jerome Paul. So let me tune up my volume here a bit. So I'm going to comment on that. I highly suggest that you also tune into this. Okay, he's anticipating that they are going to continue to raise interest rates. That's very important. They want to return inflation to 2%. He's now going to review economic developments in the USA first. So problem is that the activity in the housing sector has been declining by quite a bit as well, because interest rates have been risen by quite a while. Not everybody can afford now to buy a house anymore. So also for next year, still expecting a much lower economy growth rate than the medium of last year's. Interesting here, economy is going down, but they have almost full employment. There's a large demand for employees in the USA, but the supply of employees is very low. Maybe you have heard that on social media, this nobody wants to work anymore. So that's the excuse me, that seems to be a huge problem in the USA. Okay, nothing new here. Inflation is higher than expected. Especially energy prices are very high. Yeah, sorry, I know you cannot hear the video here. I'm cannot do that, or can I? No. Let me see. No, that my software sadly doesn't support that. So I'm going to post the link here for you on YouTube if you want to tune in on that. Hold on a second. So I put this now in the description of a video, the video stream. But anyway, it's not so important, in my opinion, that you directly hear this. And that's why I'm trying to comment on it real time, that you get the gist of it, so to say. Let's see what the markets are doing. Look here, we are moving higher. So in my opinion, this could be maybe I'm already a little bit late here. Another chance. I'm going to take the chance now to short a little bit more euro dollar here. We closed it back then down here, almost like I expected. We've come back to actually where we started during the release. I kind of speculate on that we are going into the same direction now again. High risk rate, I have to say here, really very high risk rate. So if you want to trade this as well, please do not do with high leverage, okay? So that is quite a big one, actually. So they are expecting interest rates of over 4% by the end of the year. So this is maybe where we could have our catalyst that drives the S&P 500 here down into my target zone, actually, here better to see. So maybe that's it. That is kind of surprising, in my opinion. Also interesting here. Let me just quickly turn down my volume a little bit. It's hard to listen to him and talk at the same time. What he said just now is to bring inflation back to normal levels, it's very likely that the USA is going to go through a period of lower economic growth. So that means that in translation also that the interest rates need to stay higher for a longer time. And you can see here and see this already, again, not what the market really likes to hear. Higher inflation means higher interest rates, euro, US dollar coming down here again on the 1 minute chart. So we're already a little bit up again here with our position. However, as I said, high risk trade. Let me continue to listen a little bit here if there's still something worthwhile sharing. Yeah, just tuned in at the right time here again. So he said his message has not changed at all from the last time he stepped in front of the camera, where he said the Federal Reserve Bank is going to do everything that they can to bring inflation down to their target of 2% again, which translates for the market again to we are going to probably see interest rates at a higher level for a prolonged time. So this is exactly into the risk off direction again. And don't be so confused now by maybe the reaction you see here again by here top right, the S&P 500 coming up again, Bitcoin coming up again. We saw euro US dollar coming up again. I explained to you this is profit taking, and this is why I positioned myself short here again. And I mean, I don't know, I cannot see in the future now how this position is going to be in a couple of hours, but looks quite promising, If not, I'm willing to add to this position. So should we see in the upcoming days here that actually euro US dollar starts moving higher again, I'm probably going to add shorts to this position. So I didn't go all in here. You saw I shorted 500,000 for sure. That's a lot of money here. Also, if I have like 42 on my account here, but I still have a backup here of 265,000 US dollars that I can bring into. I'm of course not going to bring all of this into this one trade, but I think the narrative still stands. We are in a risk-off scenario, and we are going to be in a risk-off scenario, as it seems, until the market expects or realizes that, yes, it seems like inflation is coming down again. And I'm very sure if we see inflation coming down here from those 8.3% to 7, 6, or 5%, the picture on the markets is going to change by a lot. Suddenly, because the stock markets and also the cryptocurrency markets, they are always front running real economic facts. So meaning the stock market is going to have performed already quite a while until the majority of people out there realize, hey, inflation is coming down. Things are kind of normalizing again. And when I say normalizing, I'm maybe talking about inflation around 2%. We are used in the past, really 12 years to a very low inflation environment with a lot of money flowing by the central banks into the market. And I think we're going to return to that. And our job here as traders for our long-term positioning is to try to be ahead of the curve. We are not going to be able to time exactly the bottom of the market. However, everything I saw in terms of interest rates movements today, everything I saw also last times in terms of inflation data. Let's not forget that, the inflation data was higher than expected, but still it was lower than the month before. Before that, we had both 8.5%. Now we had 8.3%. So we can very clearly see already that we are coming down, right, in terms of inflation. Should we see here next time a lower inflation, maybe something like 7.5%, maybe even 7%, maybe dreaming now of something there, then I'm very sure it's going to support me, in my opinion, that we've actually been through the worst. Maybe we're going to see another swing down. Yeah, maybe we're going to see those 13,000 Bitcoin, maybe the 10,000. But I don't want to try to time that, especially in cryptocurrencies. I feel much more comfortable for my long-term positioning there to slowly transition into the market again. Maybe, tomorrow I decide, right, we are now at 19,000, actually 19,500 now Bitcoin again. I want to buy for another 4 or 5% of my cash into Bitcoin again. Slowly transition into it. Do not try to time the bottom. Nobody has gotten rich by timing the bottom, and do not be mistaken. Do not trust all those influencers, all those loud voices on Twitter, on Reddit, on Facebook out there that try to convince you they have, eaten the investment wisdom with big spoons and know exactly where tops and bottoms are. They don't. Sometimes they get lucky. We all do. Sometimes we have the perfect timing for stuff, but we do not. If you scream long enough and loud enough that a bear market is coming, eventually it is going to come. And then you can say like, hey, see, I said, there's a bear market now. Things are going down. Prices are going down. However, let me tell you, if you want to really earn money during the next bull market, and if you believe there is still going to be a next bull market in cryptocurrencies, these times when nobody wants to buy cryptocurrencies, when nobody wants to buy stocks, when nobody wants to buy so-called risky assets, are the times where you should slowly start to invest again. All right. Good. I think we are pretty much done for today. Thanks a lot for being with me here on this crazy 1 hour stream. Remember again, if you want to trade, you can still use this promo code FED September 2022, FED SCP 2022. You'll find the link also to our Telegram channel in the description of this video. Join me there to stay updated. I'm sharing there really my thoughts on the markets almost every day, really, whenever I feel there is something to say, and I think there's rather a lot to say at the moment. Also, if I sometimes repeat myself there. Thank you for being here with me today, and I'm going to see you latest again next week. This week, Friday, with a new episode of That Crypto Show, where I'm going to do a special on Ethereum. So remember to always use the stop loss, stay safe out there, and also remember, trading is not everything. Also take time for your family. Take care, good night, and bye-bye.